Hi, this is Atmir with the US stock highlights here on Share Talk for Monday, the 25th of January. Starting off with the Matis, which has overshot our previous target area around $7.50. That was an old June resistance line projection from last year, and above that 750 zone on an end-of-day close basis, we're hoping for a target as high as $12, which is a late September resistance line projection. And hopefully we'll see that achieved in coming weeks, while with no break back below the $7.50 to 60 area. If I suppose the worst case scenario is that we have an end of day close back below today's intraday low at $6.86, and the shares fail from there. Onto a stock which has not been covered here before, I believe, but going to withstand corrected, as there's so many. Azrx, Biopharma. Here we see the shares deliver after a full storm earlier in the month through the $1. I suppose that was the $1.11 area. We had second time lucky or third time lucky through the $1 level, and spiking up towards the $2.50 area, which has been tested twice now in 2 sessions. The reason for this price action either side of the $2 area is that old peak from back in January last year, or was this time last year, at $1.94. We're looking for an end-of-day close above $1.94 to continue the spike that we've had, and if we can get that over the next day or two, or maybe on a weekly close basis, the target here is high as $3.50, which is a late April resistance line projection. So above the $1.90 area, hopefully up towards $3.50, and that could be seen as soon as the end of next month. From an obscure stock on the US highlights up to a rather frequent flyer, let's say AMC Entertainment. Here we've had a push through, or in fact a gap through the 50-day moving average. That's the blue line there at $4.13, and an end of day close above that. And we're hopefully looking forward to a fresh leg to the upside. There is some resistance, obviously, at the November peak at $5, but clearing that, and hopefully we've done enough to clear that with the gap through the 50-day line. We could head towards $9 plus as soon as the end of March. This stage, early really an end-of-day close back below the overnight gap, and Friday's high at $3.74, really delaying the upside scenario. Onto a stock which I teased, I think, a few weeks ago, in terms of BlackBerry being not exactly a name for the 2020s, more a name for the 2010s, or even the 2000s. Here we've had a great gap through one of the previous targets there at $13.25. So a great gap today, nearly hitting the ambitious target at $21.50, which is a March resistance line projection. But at least while we're above the floor of the gap there at $14.28 on an end-of-day close basis, $21.50 looks to be on the cards as soon as the end of February, or sometime between now and that time. Another very frequent flyer here, and one I delight in covering, is Bngo. Here we've got a situation where the shares have gapped through one of our previous targets, and also gapped through the initial January resistance at $9.95. Above that on an end-of-day close basis, and we're hoping for a target close to $15 by the end of next month. Obviously with a bit of luck by the end of this month, but hopefully by the end of next month we see $15, and clearly at that time we can then decide whether we think the shares could strike any higher after that. But it's clearly been a very strong journey over the last, I suppose, 2 to 4 weeks for Bngo. Moving along to a stock which is another sort of more traditional name, let's say, not quite in the BlackBerry category, but Bed Bath & Beyond. Surprising, I suppose, in some ways, but we've managed to, over the course of January, easily clear the previous 2020 resistance zone around, or just below, just around the $26 level. I think there's a peak there at $26.16. Current view is that while we're above the initial January resistance around 24.42, the bull run should very much extend. We're looking forward, hopefully, towards a target at that September resistance line projection currently promising a target as high as $55 by the end of March. At this stage, any dips towards the last week's resistance around $28.60 regarded as a buying opportunity for the shares, and ideally the shares won't actually go back below that, although the bull argument in place while we hold above the mid-20s dollar area. Stock which was very much flagged up in terms of having social media interest last week was Express, and not surprisingly, the shares have managed to live up to their the excitement there. Current situation is that we seem to be gapping towards a late April resistance line from last year, $5. That could be hit as soon as the end of the next month. It ties in with the support on the way down early last year. That was just around or just above the $5 level. In terms of the stop loss, we haven't really got much apart from today's intraday low at $2.97, so above $2.97, hoping for $5 by the end of next month at Express. The winner at the moment in terms of investor interest seems to be GameStop by quite a margin. Interesting here that the last time I looked at the stock, I was sheepishly looking towards $80 as a potential level. And that's obviously was almost, well, basically doubled earlier in this today's session. The situation now, though, is where support may come in. We've got the Friday's close for the shares at $65, and the ideal scenario is that there is no end of day close back below that particular number ahead of a fresh push to the upside. Once again, $80 becomes a pivotal area in the sense that an end of day close above 80 could then allow the shares to fully or partially at least retest the $159 level that we saw today. At this stage, only really back below a previously beaten November resistance line around $55, really killing the bull argument for the time being. But the retracement's so great from 159 that I think that will probably be enough for giving us a positive close today, and then trying to retrace the best levels of the spike we've just seen. Stock which I just spotted just before publication of this particular sweep is Macerich, which has a great looking chart, the greatness coming from that gap through the 200-day moving average in November, a gap then through the 50-day moving average later in November, and then a bull flag, what you could also call it a handle really, earlier in the last couple of weeks, just beating that previous June peak at $13.18. The view at this stage is, though, that while we're above the initial January resistance there at $15.10, on an end-of-day close basis, we could head up towards the top of the rising November trend channel, currently promising a target as high as $26 or maybe even $27 by the end of next month. Moving along to another stock which has been featured here on several occasions and seems to be flourishing under that kind of publicity. Nano Dimension breaking one of the resistance line targets at $11.50 last week, and now it looks like it's attempting to head towards the top of a rising trend channel from the summer of 2019. Halcyon days compared to now, that target there around $26 or even $27, and the target there of $27, let's say, valid while we hold above the initial January resistance around the $10 level. Probably if you want to tighten up that stop loss, an end of day close back below today's support at $13.21 would be the right place to go. Just 3 stocks to go now, and first one I think is a new one for us, Orbital Energy Group. The situation here is we've gapped through the initial January resistance. That was around $3.95, and at least while we're above today's intraday low at $5.85, we're looking up towards a target as high as $12 by the end of next month for Orbital Energy. Very strong looking chart after an extended base on the daily time frame. Onto a name which is again relatively new for us, maybe totally new. Rcon Technology gapped through the initial January resistance and also the gap, the floor of the gap there at around the $2.23 level. While there's no end-of-day close back below that, we're looking forward to a $4 target at the top of a rising October trend channel, and that could be seen as soon as the end of next month. Only really well below $2, really killing the recovery argument there at Rcon Technology. Finishing off with a stock which has been in the frame here before and looking good at the moment, Titan Medical. Nicely broke above or closed above the gap to the downside that we had in August, so that's basically $2. And the view now is that while we're above today's intraday low around the $2.81 level, we could head up towards the $4.30 level, which is the top of a rising trend channel from the end of February last year. But at least above $2, looking for $4 plus at Titan Medical. That's it from me today. More updates tomorrow.